welcome to this week's quick summary of the events of the last few days and a brief look at the week ahead with me, Michael Hewson, Chief Market Analyst at CMC Markets. Sentiment has been broadly dominated this week by events around the raising of the debt ceiling. Will we get a deal in time for the 1st of June? There are early reports of progress. We should find out whether or not that progress and that optimism is justified over the course of the next few days. We've also seen rising interest rate expectations, posing the question as to whether or not central banks are done when it comes to raising rates. This week, we've seen UK gilt yields rise to their highest levels since October last year in the wake of the quasi-quartine budget, after core prices here in the UK rose to their highest level since 1990 at 6.8%. Obviously, that's raised the inevitable questions about the Bank of England's culpability when it comes to their inflation-fighting credentials. We can look at a UK two-year gilt yield chart right now, and we can see that they are now back above 4.5%, raising awkward questions as to whether or not the UK economy will fall into recession in the second part of this year over concerns of the rollover of UK fixed rate mortgages when they roll off. How will home buyers refinance those? US two-year rates have also risen sharply on a similar basis over the persistence of US core inflation. And obviously that's raising concerns as to whether or not the Federal Reserve will be able to pause when they meet in June. And obviously we've had the Nvidia story, massive beat on Q2 guidance, $11 billion. We can see the effects of that in the chart in front of you right now. What was really surprising about that is very much an AI story, artificial intelligence story, but it's also a data center story. In their Q1 numbers, we saw $4.28 billion in revenue for data center alone. 3 years ago, quarterly revenue for Nvidia was $3 billion across the board. So there's huge revenue growth there. Nvidia shares are now up 160% year to date. Is that sustainable? Big question going forward. As we look ahead to the week, we've also got non-farm payrolls on Friday. Big number there. Will we get another beat? 180,000 expected, unemployment rate 3.4%. So that could certainly determine what the Fed is likely to do when they meet in June. Last but not least, European flash CPI. Again, the debate is about how many more rate hikes. We could see a fallback on the headline number from 7% to 6.4%, but it's core prices once again that are dominating sentiment, and we're probably not going to see much move there, around about 5.6%. So that's it for this week. Once again, thank you very much for listening. This is Michael Hewson talking to you on behalf of CMC Markets Connect.